Hello and welcome back to Digital Assets Daily. Good morning, good afternoon, or good evening, wherever you are in your corner of the world. I had a good article that I came across, Stellar and Consensus Distributed, and I thought it had a lot of good compiled information on it. And so I wanted to basically discuss this really good detail for all of the new investors. I really thought it was an excellent article. The immediate thing that caught my attention with this article, let's go into his opening paragraph here. Thanks to the Stellar Development Foundation, I had the opportunity to share my thoughts on the Stellar Network as an independent analyst on May 13, 2020. The following are my slides and comments from that presentation. It's been years since I first met the Stellar team, and great to see the progress they've made, especially given my experience working for years with financial institutions and standards organizations such as SWIFT and NACHA. And as we get down, he has a little slide for criteria for evaluating blockchains, the consensus, privacy, scalability, governance, adoption, and openness. And in addition to providing data analytics on blockchains, he developed a criteria companies can use to identify the blockchains best fit for a given use case. These criteria encompass social and technical considerations. Not every use case requires the highest level for every criterion. Rather, given the use case, there are likely a few criteria that are more important than others, because Stellar's use cases include enabling the unbanked to send cross-border payments. And he talks about Stellar regarding the criteria with these payments use case in mind, and also highlights where it appears Stellar's focus on payments and use cases paid off and where more work was needed to be done. His consensus here, basically more centralized to the left and less centralized to the right, having the permission blockchains, Ripple, Stellar, and then Bitcoin. The consensus is achieved at the core of how blockchains are different. Blockchains also coexist along a spectrum of decentralization. Stellar addresses problems centralized payments networks face, including high costs taken by intermediaries and potential collusion by network participants. In the slide above, on the far right, Bitcoin and Stellar can be seen on one end of the decentralization spectrum, and on this end where there is consensus, a transaction is confirmed without the need for intermediaries to be involved. On the other end of the spectrum, where permission blockchains and banks are, collusion is more likely to happen as network participants are more likely to know each other. Stellar was architected to be decentralized in that well-behaved nodes can sustain the network despite the presence of a malicious or malfunctioning node. However, in a hiccup last year, the Stellar network went down for over an hour, and one of the issues reported was the configuration of Stellar's FBA, which is the Federated Byzantine Agreement, which is also a consensus model based on quorum, slices, and highly centralized. Since then, the SDF has communicated the team has worked to address this issue, and in reality, all networks basically need to continue to add nodes and achieve better operational standards to fully realize the benefits of decentralization. And some will say that Stellar is not as decentralized as Bitcoin, but there are trade-offs for increased decentralization versus scalability. And of course, scalability, it basically just comes down to the transaction speed, and Stellar is unbelievably fast, and it's pretty impressive. So Stellar's main use case is payments, so transaction speed is a high priority, as opposed to Bitcoin, where you could argue the main use case is a store of value. And I don't think anyone really disputes that, because even Bitcoin investors, and I mean, I came into the space years ago through Bitcoin, so I understand from first-hand experience. Basically, when you have Bitcoin, it's basically like the store of gold, the store of value, as it's been stated. It's not as fast as the hybrids or the other newer DLT blockchain capabilities and scalabilities. It's pretty amazing. Stellar's ability to provide fast transactions is critical to its continued adoption. For example, he used the example of paying for coffee, and he didn't want to wait 10 to 15 minutes for the transaction of Bitcoin to be confirmed. And so for the example of waiting 10 to 15 minutes versus Stellar's transaction speed is like 3 to 5 seconds once it's been initiated. Another section here, the openness, the operational transparency. The openness is the ability for anyone to access the network or participate in validating the network. As Stellar is intended to be a network that anyone in the world can use, including the unbanked, the openness is critical, like the transaction speed. Openness is exemplified on the Stellar network, where anyone can be a validator, and transparency is also important as part of the openness. And here on Stellar Beat, again, feel free, because I do include the links. He does highlight these in the underlined sections here. You can click on them, and they are links if you're interested to learn more as a new investor. And everyone who can see the validators are and where they are located. And then you have privacy. You have regulators and privacy, Lightning, the FinTrack, and then you have Stellar. Privacy has been a controversial topic for blockchains, and they'll talk about privacy on blockchains as it pertains to the ability to conceal the transactions. And privacy has been top of mind for regulators recently. Last year, he had met with FinCEN after they released their guidance on how money transmitters that have digital currencies are subject to the same regulatory obligations as when operating in non-digital currencies. And again, that's something that caught my mind, or caught my attention when I was reading through his article, and I thought was pretty impressive. I mean, he'd worked with Notcha, Swift, and had meetings with the FinCEN, so it gives him a lot of credibility and respect in regards to the discussion that he had shared. So that's exactly what I thought was impressive about how he compiled the information together. You know, I could continue to add, and we actually have done more on this site. If you follow us and you've seen our videos, we go into a great more detail, but I think he did pretty well for a compiled video to be able to share for the new investors. I think he did excellent, and thank you very much. The Financial Transaction and Reports Analysis Center, the FinTrack, has new guidelines for like foreign money service businesses, the FMSBs, and the money service business, the MSBs, dealing in virtual currency that pertain to privacy coins. The indicators of suspicion include the customer portfolio only consists of or has a high value of privacy coins, e.g. Monero, Dash, and Zcash. A customer is unwilling or unable to provide information about the source of privacy coins they once held or currently have. For this privacy discussion, it's important to note that while Dash and Zcash have privacy-enhanced features, most transactions on the networks are not sent in private mode. To help address regulatory requirements, our product enables compliance managers to better determine when and what to report. For example, companies can distinguish between instances when a customer has sent most of their funds in private mode as opposed to non-private or pseudonymous mode. While Stellar does not yet have the privacy-specific features, its proposed integration with Lightning would enable privacy as a Lightning payment does not have to be public. And if Stellar continues with the planning to add the Lightning support, Stellar might end up being similar to Zcash and Dash, where a smaller subset of payments are sent in private mode. In the governance fighting fraud, you have the darknet, terrorist financing, ransomware, fraudulent hosted wallets, tumblers, mixers, impersonation fraud, institutional scams. And that's where, switching gears to governance, lets you look at another regulator goal of fighting fraud. Regulators are asking money transmitters to report on money laundering and illegal activity so people can safely use the blockchains as part of this fraud. where illegal activity related to ransomware and dark markets take place. At Blockchain Intel, they provide indicators of this fraud and illegal activity. For example, there have been a number of impersonation cases where people have impersonated well-known leaders in the industry and asked for payment. People have impersonated individuals and then have gone to the friends of those individuals asking for funds. And Blockchain Intel works with the law enforcement to validate these fraud cases and help where it's possible. Overall, in cases, they've seen XLM has not come up as a bad guy's coin of choice, so that's excellent. And again, I'm not sure if you saw yesterday and today, the interview with Chris Larson, and again, he mentions over and over multiple times throughout the video, regulatory clarity. Once they have regulations, I mean, he can't say it enough, and we kind of echo his statement on that throughout this channel, because a lot of people tend to get very frustrated with pricing, but they don't realize the power of the regulators, even on a global scale from the United States, where finance is involved. It's a pretty serious issue. So last year, Stellar partnered with Keybase, which is a platform that can help identify impersonators and hopefully prevent that kind of fraud. As it turns out, one of the unintended consequence or results was a bunch of people creating fake Keybase accounts, and they were trying to get the airdrop and Keybase into the program. I forget off the top of my head, it was something like, I want to say it was something like 1 billion Stellar airdrop type scenario to celebrate that partnership, but it became out of control, so they just shut it down 100%, closed it down. And while fraud may not have been as much of an issue for the past for Stellar, it's something people have to continue to watch, and there are a growing number of independent solutions that help identify fraud on the Stellar network. And then if you click here, another link, again, if you're able to look at your screen, don't do it if you're working or driving, don't get in trouble, be safe. There's another link you can click on, and it's a recording of a session. They did an impersonation and institutional fraud, including what you can do to prevent and address fraud. So also to prevent future fraud and increase adoption, Stellar had developed more targeted efforts to get lumens in the hands of people who use it. And they've outlined these plans for distributing lumens in the future, and they have another link here. So basically, if you see an underline and you're interested, then you can go back and click that, and it will take you to another web page that you can find further information. And again, we have adoption, the decentralized exchange risks, the centralized exchange risk, and reported the V on the chain volume and unregulated exchange, settlement times, volatility, and Stellar has 36 anchors and growing, e.g. Cowrie Exchange, Settle Network, InToken, Saldo, Anchor MX, and Anchor AR. Getting people to use XLM brings us to the topic of adoption, and that is a key phrase that we've heard for years as, more long-term investors. And I think those of us who've been here, suppose 3 to 5 years or longer, adoption is unbelievably happening very quickly as of 2020, where most of the tokens kind of just sat there. Obviously, we did have the major bull run in 2017, but again, that was really on speculation. It wasn't so much adoption like we're going to see for basically next year's, the next bull run cycle for 2021. I can only imagine what it's going to be like in 2025. Because again, remember that the 2025 cycle, let's go back to now, to current 2020. They're saying about 1 to 2% of the global population is somewhat connected to where, like digital assets, cryptocurrency, etc. But by 2025, that's where they have stated to have the full market maturity. And they're expecting something like over 80% plus of the global population would then be connected to digital assets and cryptocurrency. Can you imagine? So the first thought that flashes through my head is Chris Larson's statement in an interview earlier this year. I can't remember, January, February, where he was asked, where do you think we are in regards to the internet boom, which in the discussion was in the thought of the time frame, basically 1994 to 2000. And Chris Larson responds somewhere between 1995 to 1996. And that was pretty much, in my opinion, the point where it really began its upward momentum for investors, where they really began to see their investment start compounding. So in terms of liquidity, one of Stellar's big advantages is the built-in exchange. And it's making it easier for decentralized exchanges to support. XLM differentiates Stellar from other coins because trading is not the main use case for Stellar. And let's take a brief look at trading risks, which include the differences between regulated and unregulated exchanges. At Blockchain Intel, they've analyzed the centralized unregulated exchanges and found their reported volume was vastly different from their actual on-chain volume. And looking at the exchanges with the highest XLM volumes in the last week, the centralized exchange volume was significantly higher than the decentralized exchanges. And across all cryptocurrencies, there are times the exchanges with the highest volumes were unregulated exchanges, but first, unregulated exchanges didn't have the same minimum liquidity requirements as required or by the regulated exchanges as they do. So second, since the unregulated exchanges are not required to monitor transactions for money laundering for the criminal activity, they're usually at higher risk of being shut down for those exact reasons. And if you're an investor, it's also important to understand your risk exposure when the markets change quickly, which leads us to volatility, another controversial topic. And the adoption, liquidity, and volatility was his next article. And it's one of the reasons for cryptocurrency volatility is that the market moves of around $1 million worth of digital currency and can exchange the price dramatically. The market moves can be the result of liquidations. For example, for the Dash coin, he had correlated a drop in the price with liquidations, a particular lender mode. And in this chart, you can see a lender received over 95,000 Dash when the price of Dash was high. At a certain point, the lender started liquidating, but as they liquidated, the price dropped even further, enabling the lender to liquidate all of the customer's collateral. Decentralized exchanges on the Stellar network and centralized exchanges trading XLM have lower volumes than other markets, and today the seemingly small changes in other markets can have an enormous impact on the price of XLM. And to mitigate the issue of volatility, Stellar had made it easier for central banks to use the Stellar network to issue stablecoins. And last year, banks indicated they'll issue stablecoins on an IBM payment network that uses the Stellar public blockchain. For information on that use case, again, these little underlines are connections to other web pages and little tabs. So at Blockchain Intel, they look forward to continuing the discussion on whether stablecoins can address volatility issues. And to view the post on the last panel on that topic, you can click here for another recording. Because Stellar's use case is payments, getting lumens in the hands of people who will use it for payments, as seen in the TNB SDF as outlined. They will invest in Stellar sustainable use cases. And again, another link, and I believe that one takes you directly back to the stellar.org explaining exactly what the statement says. Besides liquidity, uptake in the community is another measure of adoption. Case studies on Cowrie Exchange, the link will take you there, Saldo and Satoshi Pay provide good examples of where uptake has been. And you can also look at another proxy for community activity, website activity, and the stellar.org website. The activity is in line with other network sites based on market cap. And because the main use case for Stellar Network is payments, anchors, the on-off ramps of the Stellar network are important to look at when measuring adoption. The number of anchors has steadily grown, as have the number of validators. The Stellar Development Foundation has also focused on certain regions for anchor development, such as Latin America, through the Settle Network, N-Token, Saldo, Anchor, MXN, and Anchor ARS. And in the future, He states looking forward to seeing new case studies and metrics on the unbanked. And Stellar as a payments focused network has differentiated with respect to scalability and openness. And it's also clear Stellar Development Foundation had focused on requirements for consensus and adoption in their target markets, while they're always developing areas such as governance. He's stating looking forward to the Stellar network in the future. But I thought this was a really excellent article. Guys, I want to finish off this video with a final thought. But just remember 3 little words. Yes, you can. Don't quit. Don't stop trying. And you will succeed. This is not financial advice. It is for entertainment purposes only. Please hit the like, share, and subscribe. And we will catch you in the next one.